Ladies and gentlemen, I would like to welcome you to another investor update. I'm your host, Rachel Curlew, AVP Investment Banking. Sharing the panel with me today is another investment banking analyst, Justin Scott. Good to have you back, Justin.
Thanks, Rachel. Glad to be here.
Great. Today we'll be discussing Careras and Fesco, and we're excited to share with you these insights. If you like the content, don't forget to hit like and share this video. If this isn't your first time here, then be sure to subscribe and hit the bell to receive all notifications. We upload content like this once per week. If you're looking to embark on your investment journey, take that first step with Mayberry Investments Limited. Follow us on social media today and get started. So I'll begin today's discussion and I'll start with Fesco. Okay, so let's recap. Fesco is the fifth largest transportation fuel marketer in Jamaica, but the second largest marketer by volume of fuel sold. They began in 2013 with just one Fesco branded service station, and by 2014 they had about roughly 3 of them. Fast forwarding to today, they operate a total of 20 gas stations and recently now involved in the LPG business, with owning their own LPG factory. Fesco is also the only fuel company listed on the Jamaica Stock Exchange. Fesco listed on the junior market back in 2021 at 80 cents, and the stock is now trading at $3.44 with a PE of 14 times. So 3 times price appreciation on your money. So let's see what's going on here. For the 6 months ended September 30th, revenues increased 3% to $13.7 billion. Cost of goods sold remained relatively flat at $13 billion, which resulted in a 2% improvement on their cost of goods margin. Consequently, this resulted in gross profit increasing by 77% to $718 million compared to $406 million reported for the same period last year. Expenses, however, increased by 161% from $130 million to $340 million. Management indicated this reflects growth in operations, asset base, and early stage new business costs. All this resulted in operating profit of $377 million for the period. After considering finance cost of $61 million, net profit for the period amounted to $316 million, a 13% increase from the $281 million reported in 2022. Examining the balance sheet, their total asset base now stands at $4.6 billion, up 43% from $3.2 billion. Their liabilities also showed an increase of 37% to $3 billion. And finally, shareholders' equity now stands at $1.6 billion, a 54% improvement on the $1 billion reported last year. Looking at the market stats table, the stock is trading at a price of $3.44 relative to a PE of 14 times and trailing earnings of $606 million. The stock is trading at a PE below the junior market PE of about 17 times, which makes the stock slightly undervalued. We are seeing where the stock has a 52-week high of $5.51, and I see no reason why the stock cannot trade back up to this point, considering how good the company is performing. The company is a solid junior market company, poised for growth, and I have a lot of confidence in this company. With a closer look at the second slide, it is evident that the company's quarterly profits are rising as they continue to boost sales by selling more petrol and just expanding their product line. As mentioned earlier, they're now in the LPG business where they acquired an LPG facility. They're actually currently expanding the LPG facilities now, fleet, operations, and distribution footprint within that space. Also, they plan to open their 21st petrol station in Port Maria, so great things there. Looking at the final slide, the stock again is trading at $3.44, PE of 14 times, which makes the stock undervalued relative to its trailing earnings and the junior market PE of about 17 times. Once more, this is a stable junior market company that is expanding rapidly. The company has demonstrated tremendous growth over the last 5 years. They have increased revenues by 48% and profits by 67% to 26 billion and 571 million respectively. Notably, the stock has traded as high as $8.49 back in February last year, and I see no reason why the stock cannot trade up back to this point, so it's a buy for me. What are your thoughts, Justin?
All right, thanks for that, Rachel. Yes, I am definitely aligned with you in appreciating where Fesco, the company, is going from here in their expansion to building up their 21st service station out in Port Maria, as well as expanding their LPG business operation and really just ingraining themselves as a premier fuel and energy distributor. So I like where Fesco is going. I'm sure as time goes on, they're going to want to get a bit more aggressive with that LPG route. Perhaps as rates go down, they want to go into refinance the debt that they went into to step into the operations. As far as the turnover on the company goes, they're looking very solid. They're very much consistent. There are some fluctuations in the energy and fuel prices in the international markets right now, but I'm sure Fesco will be able to tide those over and continue, performing excellently. As far as the stock itself goes in the profits, it's a very widely held company. So for a lot of the people that would have gotten in from about the $8 thereabouts or some people would have jumped out, some people would have repositioned their holdings, and some people would be dollar cost averaging, another topic I'll touch on later. But I believe it's going to be in that nice $3 to $4 trading range thereabouts between now and perhaps the next 6 to 9 months, I want to say comfortably. That nice 3 to 4 region bouncing between that range. But I do like Fesco as a company. I think they're great. I think they have a lot more in them, and I think they have great management teams. So I'm looking forward to see what Fesco does going forward from here.
Great, thanks for that. Now I'll hand over to you to get started with Careras.
All right, thank you so much, Rachel. So let's get into Careras now. So for all those who wouldn't know, Careras Limited is a Jamaican company that markets and distributes cigarettes, tobacco products, smoking accessories, and now vapes. More on that soon. So Careras recently released its 6-month September-ended financial statements, displaying moderate growth in their top lines, and are on pace to continue pressing above their $14 billion sales figure they began to establish in 2020 and are continuing to exceed without any significant increases in prices since then. So it should be noted that in July, it was announced that Careras would be changing their financial year into December following the end of this calendar year. So for those of you in the Jamaican market will know, Careras is not only the most consistent dividend-paying company, it consistently has one of the highest annual dividend yields every single year. So for context, if you were to have invested $20,000 every single month from November 2018 to November 2023, you would have invested just underneath 1.2 million Jamaican dollars. And even though the value of a Careras shares would have been relatively flat concerning capital gains, only gaining about 0.5%, you would have gotten over $232,000 in dividends, which would push your total holding period return for just over 20% for very low risk. And that's even before considering dividend reinvestments. So in regards to their current financial statements, ones which were most recently released, the 6-month September-ended results, operating revenues increased 11% from $7.5 billion to $8.3 billion. Gross operating profits are up 17% from $3.4 billion to $4 billion. And their net profits after taxes are up whopping 33% from $1.6 billion to $2.1 billion. So this is exceptional performance for such a mature company, increasing their net profit lines by over 30%, which they've achieved majority through optimizing their distribution channel, of which they have one of the greatest distribution channels in Jamaica, if not in the region. I'm not sure there's quite many places in Jamaica you can go without seeing Craven or Matterhorn brands. So it's really great for them. Earnings per share naturally is up 33% as well, up to 44 cents per share, with their total assets increasing 30% from $4.6 billion to $6 billion, and their total liabilities up 42% from $2.6 billion to $3.7 billion, and shareholders' equity up 15% from $1.9 billion to $2.2 billion. The current trading price is $8.16, with a PE ratio of 9.5 times, which is just below the main market average of 10 times. Book value per share of 46 cents, which is just about where they're just a little bit over the earnings per share. So that's a good note for the fundamental investors out there. The trailing earnings is actually $4.1 billion. And I expect that to continue increasing as the year goes on, especially with their new innovations that they've unveiled, with a 52-week high of $9 and a 52-week low of $7.8. As you guys will see a little bit further in the slides, it's a very consistent company as far as share price goes, which is good for those who look to retain value. And I want to stress this, is that it's not a very robust company as far as stock price is concerned. With a market cap of $39 billion, this is a very mature company. Careras is one of the ones that are most notably known amongst the dividend investors. And so if you guys take a look over at your other screen, you'll notice that Careras is very healthy in terms of their profit movements. They keep very consistent profits, over $690 million every single time over the last 3 years. So very healthy company in terms of net profits. They're very efficient. They have a great distribution product, and that's enabled them to be so consistent. The stock price history, as I said just a bit earlier, is that it's a very stable company, bouncing between just below $8 to as high as $9. And in fact, it's not so sensitive that a dividend announcement will cause a spike or a dip after the dividend has been paid, just because of how consistent it is. I believe that stems from the shareholding float, because it's such a widely held company. It's one of the legacy companies in Jamaica. A lot of people have it. A lot of public investors will have it. And the majority shareholder, British American Tobacco, is over 50%, and they're not looking to be selling, or I don't imagine they'll be doing any serious purchases of the company anytime soon, which kind of maintains a certain level. So the people who are moving in and moving out kind of keep the price underneath control. So Careras is very consistent in that manner. So it's not one for those who are looking to get 100% return in X amount of time. It's for those who are looking for nice, stable, consistent cash flows. As I would have pointed out earlier, with dividend reinvestment model, with the dollar cost averaging model I presented earlier. So Careras is very much a stable stock, great cash flows, and it's a great, and more than likely stable in any serious dividend investor's portfolio. So in news right now, Careras has actually launched a series of vape products under the Views brand, which can be located in many of the key distribution points right now, although it hasn't begun to do their serious rollout as yet to get to be basically ubiquitous in Jamaican market. They continue to sell their traditional cigarettes, which is their cash cow, and in fact has launched a new watermelon flavor Matterhorn recently as well. So no revenue forecast was announced to indicate how their Views vape sales would fare in an extremely competitive market for vapes right now in the fight for their market share, as they try to really capture the younger generation and try to do a brand new spin on this. So as I would have pointed out earlier, Careras is actually one of the strongest distribution channels on the island, and perhaps even in the region, where in 2021 they disclosed that they sell over 480 million cigarette sticks per annum, which represents just over about 3/4 of the legal cigarette trade in Jamaica, but approximately 10% of the market share is lost to the illicit products on the market, and the remainder of which goes to some small outliers of a very big pie. So cigarettes are very much a staple in Jamaica, as you can tell by such high profits, doing over $16 billion per year and $8 billion consistently over the half year. And they continue to revitalize themselves in going into vape products right now. And finally, Careras has actually launched a series of vape products under the Views brand, which is one of the top vape brands internationally, which can be located in many of the key distribution points in Jamaica. But they haven't really gone to such a large rollout as yet, so that you'll be seeing them ubiquitously in the Jamaican markets. But they continue to sell their traditional cigarettes, and in fact has launched a new watermelon flavor, Matterhorn, recently as well. But even though no revenue forecast was announced to indicate how the Views vape sales would fare in an already competitive market for vapes, in their fight for the market share of the younger generation, it's interesting to see how this will pan out further. I don't want to sound too much like I am heavily advocating for cigarettes. I don't smoke cigarettes myself, but just telling you how it is for the company. But yeah, so Careras is still, it's a mature company. They're able to continue increasing the net profit line over 30%, and they're revitalizing themselves. They're trying to shift and adapt to the market trends right now and try to capture the younger generation. So I think they're a very stable company and will continue to be paying these great dividends from time goes on. All right, Rachel, any thoughts from you?
Justin, Careras is a well-established, stable business with modest revenue growth, as you mentioned earlier. Over the last 4 years, their revenues have increased by 6% on average. I'm interested to see how their recently released line of rape items will turn out. They have a strong distribution channel, so let's see how they will work this new line. It's a top dividend-paying stock on the market, as you previously mentioned, with a dividend yield of 10.5% year-to-date and 9% last year. You provide a fantastic example previously, allowing investors to understand the significant importance of this. So if you're an investor searching for a reliable dividend income source, Careras is definitely the stock for you. And that's it for today, guys. I'd like to thank our viewers again for being a part of today's investor update. I'd like to thank my fellow panelist Justin for his contribution to today's discussion. We encourage viewers to follow us on social media for all things forum related. And don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Thank you to all our visitors for tuning in today. Keep safe and remember, wise investors, slow and steady wins the race. Thank you.